Welcome to everyone. This week video will cover the SP 500 index for the week of November 3, 2025. Before we start, make sure you read carefully the disclaimer. I recorded this video on Thursday, October 30th after the closing bell. With a 6,877.28 high on October 27th. The SP 500 index meet his 6,859, 20-week cycle target. Is the SP 500 on his way to meet the 7321 next upside target? Let's see together what we can expect in the near future. Let's start with the 18-month cycle. With a 6,920.34 high on October 29th, the SP 500 index reached a new all-time high. For this week update, we will be using the first scenario from my last update. Theoretically speaking, the peak for this 18-month cycle is still expected between January and February 2026, and the low in October 2026. We are actually in the second 18-month cycle within the next 54-month cycle. We can expect the low for this 18-month cycle to form at least to his cycle line, the yellow line. The 40-week cycle. The SP 500 is 401 point or 5.47% away from his 7,321 target. Triggered on June when the SP 500 crossed above his cycle line at 6,078. The peak for this 40-week cycle was expected to form in September. But due to the very bullish trend, this peak will form on the right part of the cycle, confirming the next correction should be a mild correction. The 40-week cycle low is expected in January. And since this is the first 40-week cycle since the last April major low, we can expect the SP 500 to find support on his cycle line. The cycle line at the end of January 2026 will be around 6,500. After forming his low, we can expect the SP 500 rebound and rally on his way to form the second 40-cycle peak, which will also should be the 18-month cycle peak. If the bullish trend continue with the same strength, we may expect the next 40-week peak to form in May 2026. The second 40-week cycle low is expected between September and October 2026, according to the Hurst rule of synchronicity. This low will also be the 18-month cycle low. A more precise time target will be available later, with the lower time frame cycles. Let's see now the 20-week cycle. The last 20-week cycle formed his low on July 28th. Last week the SP 500 index meet his 6,859 target triggered on the May 11th week. The last 20-week cycle have a length of 16 weeks. 3.5 weeks shorter than the Hurst nominal model, which have an average of 19.5 weeks. But in a bull market, is very common the cycles run shorter. We can expect the next 20-week cycle have the same length than the first one. In this case we can expect the next 20-week low to form on the November 17th week. But very often to respect the Hurst nominal average, it is very frequent in one cycle, the two lower cycle composing this cycle. Example, in the 40-week, there is one shorter 20-week than the nominal model and one longer, to reach an average of 19 weeks. To respect the 19-week average, we can expect the next 20-week cycle to have a length of 23 weeks. In this case, we can expect the second 20-week to form his low on the week of January 5, 2026. Of course, since the second 20-week cycle low will coincide with the 40-week cycle low, depending the length of the second 20-week, the length of the 40-week will be affected. We will watch carefully where the peak of this second 20-week will form. If the second 20-week cycle have the same length than the first one, and since the last low formed 13 weeks ago, then we should expect the SP 500 index, starting a correction now, and should last the next 3 weeks, forming his low on his 40-week cycle line. In the case the actual 20-week cycle will be 23-week long. Last week SP 500 index peaked formed at the peak of the cycle. And if the SP 500 index keep moving up for the next few weeks, then the 20-week cycle will form his peak at the Richt part of the cycle. In both cases, technically, the SP 500 index should cross below his cycle line and form his low on his 40-week cycle line. Here the cycle line and their potential targets for the next 5 weeks. Of course, if the SP 500 index make new all-time high before crossing below his cycle line, the target will be recalculated according to the Hurst rules. The 80-day cycle. Since the last major July 28th low, marking the 20-week cycle, We have one 80-day cycle. As expected after a major low, the first cycle formed his low on his cycle line on October 10th. The first 80-day cycle have a length of 70 days, 2 days longer than the Hurst nominal model discovered 50 years ago. If the second 80-day cycle follow the Hurst nominal model, then the next low is scheduled to form in December 17th. Since the second 20-week cycle start his Dow phase, during the next low formation, technically the S&P 500 index supposed to cross below his cycle line, providing a downside target. Here the cycle line for the next 10 trading days and their potential downside target if the S&P 500 index cross below it. The purple uptrend line draw from the last 20-week low to the October 10th low, represent the 80-day cycle trend line with a VTL. When the S&P 500 index will cross below it, this will confirm not only the 80-day cycle peaked, but also the 20-week cycle peak is formed or in formation. The 40-day cycle. The last 40-day cycle formed his low on October 10th. The S&P 500 index formed his low on his cycle line, technically during the second cycle after a major low on July 28th. The S&P 500 index supposed to cross below his cycle line and provide a downside target, but due to amount of bullishness, the S&P 500 formed his low right on his cycle line. The next 40-day low should form on November 17th, the blue vertical dashed line, and should cross below his cycle line. Here the cycle line for the next 10 trading days, and their potential target if the S&P 500 index cross below. The peak for the actual 40-day cycle is expected on October 29th, from October 10th adding 19 days, give October 29th as a potential date for the 40-day peak. On the October 29th, the S&P 500 index made a historic new all-time high at 6,920.34. If that is the peak, then the S&P 500 index peak right at the cycle peak. Is October 29th as the 40-day peak? We will find out by analyzing the next shorter cycle, the 20-day. For more details and in order to make this video relatively short, I recommend to visit my website, tradingmarketcycles.com. The blue uptrend line is the 40-day VTL. It will be used to identify the next 80-day cycle peak. When the S&P 500 index will cross below, this will confirm the 80-day cycle peak has formed or is in formation. In conclusion, the S&P 500 cycle analysis reveals we're at a critical juncture. With new all-time highs achieved, multiple cycles suggest a correction is approaching in the coming weeks. The key levels to watch are the cycle lines, particularly around 6,500 for January 2026. While the overall trend remains bullish with target pointing to 7,321. Near-term weakness is expected. Remember, cycle analysis provides probabilities, not certainties. Always use proper risk management and consider multiple factors before making decisions. Visit tradingmarketcycles.com for more detailed about cycle analysis and stay tuned for next week's update. If you found helpful, please like and share this video, subscribe to stay updated with my weekly trading insights. Thank you for watching, see you next week.